The stock market is definitely cracking. I don't know if people have noticed or have seen it on their statements yet that have started coming in the mail, but they're going to start going down in value. 50% of the NASDAQ stocks are down over 50%. Many are more, down much more than that, as a lot of stocks have been crushed.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group, and his peers characterize him as a straight shooter who will work harder for you than anyone else. And you're about to hear that put into action. Today, our topic centers around a very scary word: recession. Protect your retirement plan before it's gone. Ken, I had planned on starting our time out today with a definition of a couple of terms, but let's get right to the bottom line for just a moment, because that subtitle is one I think we all need to take a look at. With the possibility of a recession, protect your retirement plan before it's gone. How can a recession affect a person's retirement plan?
Well, it's nice to be with you today, Dave, and welcome to the financial system, according to Dave and Ken audience. Nice to be with you. But it's real life. And, how much is inflation going to eat away our future income or our retirement income? How is the market going to take wealth away? Don't forget, the Fed has given wealth over the last 10 or 20 years through all of their money printing, Dave, and all of their debt. And he who giveth is he who taketh away.
Yeah.
And, that's kind of how I feel right now. Our point is how do you protect your wealth going forward so you do have enough to live on, or you do have enough to give to your grandkids or your kids as a legacy? How do you protect your nest egg? And that's kind of what we'll be talking about today with the scary word recession.
Okay, let's set the table then by going back to what I had alluded to a moment ago, and that is defining a couple of terms that we are hearing more and more in the news these days. One is inflation, and now we're hearing the word recession. Let's get to how they are defined and how they relate to each other.
Inflation is a general increase in prices, Dave, and a fall in the purchasing value of our money. Okay, I don't know how much more straightforward we can be than that. And we've been seeing that for more than a year now, and I would say we've seen that for more than 10 years.
Mm.
It's just kind of becoming more pronounced right now,
Mhm.
growing inflation. Then, Dave, we have the definition of recession. And recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP, which stands for gross domestic product, in two successive quarters. So it's just a general slowdown in the economy where there's no real growth. Well, there hasn't been any growth for a very long time. This has all been pretty much fake, and it's due to debt, and it's due to printing money. So eventually that bubble bursts. And you remember the caveat here, Dave, is we are in the mother of all bubbles. We are in an everything bubble. We are in the biggest bubble of our lifetime, and eventually it is going to pop. And we're starting to see that already, and we can get into that a little bit more as the show goes on. How much more aware is the audience that their money just doesn't buy as much as it used to? And now we're seeing economic indicators, literally, Dave, that are warning of a fast approaching full-blown recession. So not only is our currency getting crushed, not only is the stock market cracking, not only has the bond market lost trillions of dollars over the past few months, but now we could be facing a slowdown or a recession.
Ken, here at the beginning of the program, we usually reflect on the news of the day. It gives us a perspective on the economy and how it can affect our personal finances. And I am seeing more and more articles about an additional downturn in the economy. We've spoken over the past few months about runaway inflation, the highest it's been in 40 years. And we just saw cost of living inflation hit a new 40-year high of 8.5%. Every month it seems to hit a new high. But even more alarming is that in March, wholesale inflation soared 11.2%, and that is the highest on record. Ken, we have a lot to be concerned about, don't we?
There's a lot of stuff going on here. And unfortunately, I don't feel comfortable that anyone out there has has the leadership abilities to fix this. And unfortunately, that means what could I do about my situation individually myself? And that's what I would encourage people to think about right now. How could they individually fix, protect their own situation? And that's what we're going to talk a little bit more about today with physical gold, Dave.
A reminder here that you are listening to the Gold Standard with Ken Russo from Midas Gold Group. And today, our topic is recession. Protect your retirement plan before it's gone. Ken, as we look at the economy, inflation is out of control, the stock market is in turmoil, and real estate is suffering. There's a lot of insecurity right now.
Yeah, I hate to just beat the same drum, but there is, and don't forget, we've just gone through 10 years of a great real estate and a great stock market and a great 30 years of a bond market. So, all good things eventually, they're going to come to an end. We've been saying for how long that we're on a joyride due to fake money, and we're on a joyride due to stimulus, and we're on a joyride due to just helicopter money, and you just can't keep doing that. So there's a lot of stuff going on right now, but I hate to say it, we told you so. And if you're fortunate enough to have benefited from all of this, recklessness by our politicians and our bankers, just reckless money printing and reckless debt, thank God, and protect some of it and diversify. And that's the main point of our conversation today. There's a lot of stuff going on, Dave, and we don't have the answers for it. But what we can talk about is how could we protect a good portion of our nest egg.
Let's get into the weeds for just a moment, you might say. Our main topic today is something far worse than inflation. It's recession. And you have this warning for us. You are actually seeing indicators that a recession is looming. And I know that you're going to be able to put this into layman's language for us because there's a lot of economic highbrow talk about this. What makes you believe that a recession is looming?
Well, just being realistic, just kind of a gut feeling. But I would say, an inverted yield curve is also a pretty good indicator of a future recession. And the yield curve inverted in 2019, and then recently it inverted again. It's now gone normal. An inversion, Dave, is when the short yield, the short rate of return, the short interest rate is greater than the longer term interest rate. And that's typically been a very good indicator, a consistent indicator of a future recession, possibly, 6 to 12 months down the road. Not foolproof, not a crystal ball, not a wizard telling the future, just some observation. So the inverted yield curve is a potential flag for a future recession.
Let's break that down into layman's terminology. My understanding is of the bond market is that the norm is that long-term bonds usually have a higher rate of return than short-term bonds, right?
Right. I mean, it would make sense that someone would get a better, return interest rate rise if they allowed someone to hold on to their money for a much longer time. So yes, correct. That's typically how it works. But I would say right now we're in a market of things being not typical.
So you're saying that the relationship between long-term and short-term bonds has actually flipped, and that is used as an indicator that a recession is coming.
Yeah, it flipped again in 2019 for a brief period of time, and it just recently flipped again, and now it's flipped back. So it's going back and forth, but I would just say that has more proof of the uneasiness of the economy and of the markets, very uneasy. And Wall Street and the stock markets don't like confusion. They don't like disruption. And right now we have a lot of confusion, a lot of disruption, and possibly a lot of slowdown.
So with inflation continuing to eat away then at the value of that $20 bill in my wallet, and the strong possibility of a recession causing stocks to fall and jobs being eliminated, how does gold then help a person's personal financial health?
Well, you got to ask yourself, how do you make up for, the loss of purchasing power and the loss of buying power and the loss of wealth in those other markets? If you're thinking about your portfolio right now, and let's say it's invested in a lot of mutual funds and a lot of stocks and a lot of bonds and let's say some real estate. Well, if those markets take a big hit, and I don't think if it's an if, it's just when those markets take a big hit going forward, what's going to help you make up for some of those losses? And gold, Dave, physical gold, not paper gold, not mining shares, not ETF gold, not the kind of gold that your advisor or your banker is telling you to do paper wise. The real stuff that you could hold in your own hand will help make up. It will help offset some of those other losses in those other markets. So if you're looking for assets that are liquid, a store of value, a medium of exchange, and something that's going to hold your buying power, one of the simplest things to consider right now is diversifying into physical gold and silver bars and coins, because that, Dave, has a long track record of being money, being trustworthy, being liquid, and holding your purchasing power.
A reminder here, you are listening to the Gold Standard with Ken Russo from Midas Gold Group, and today we're talking about a looming recession and where you can safe harbor your money to preserve it and not lose it. And I've got more questions coming up, but first, in just a few moments, we're going to take a look at a specific gold product that can add to your secure wealth, and that's coming up right after this.
The Fed lied when they initially said inflation was transitory. They knew it wasn't, but didn't want to panic the markets and you, the people. This is why they tried to keep secret the $125 trillion in loans they gave banks around the world. We've seen inflation ramping up, and Midas Gold Group thinks the Fed is way behind the curve with interest rates. Venezuela is the case study when political policies go awry and chaos ensues. It's time to call Midas Gold Group, 855-322-GOLD. You can add financial privacy and protection from inflation and profit potential to your investments through physical gold and silver. They provide you with the quality service and critical information you need without the pushy salesman. Get your portfolio reset with gold and silver. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is recession. Protect your retirement plan before it's gone. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to come visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Ken, we now turn to look at a specific gold product, and today we turn our attention to what I know is a favorite of yours. What are we looking at, and why do you like it so much?
Well, Dave, I'm holding a beautiful, absolutely beautiful gold coin featuring the iconic Walking Liberty design of Augustus St. Gaudens. And this coin, for those who are guessing out there, is the gold American Eagle. It is the preferred government-issued bullion coin of American investors. And the 1-ounce gold eagle, Dave, it can probably boast the title of the most popular gold coin in the world.
Wow. What's its history?
Well, when it was first authorized by Congress, Dave, in 1985 and minted, this bullion coin, yes, it's a bullion coin. People think that bullion is just bars, but this is a coin based on weight and purity. So this, the gold American Eagle, is a bullion coin. It was an instant smash in 1985, Dave. It reached iconic status almost overnight. As our audience knows, it's a 22 karat gold coin. It still has an ounce of gold in it. It's 0.9167 fine, and it makes Gold Eagle extremely durable and strongly resistant to scratching because it has some different alloys in there versus a 24 karat gold, coin, which would be not as durable and a little bit easier to scratch.
Hmm.
It's the largest gold coin, Dave, struck by the U.S. Mint. Its purity is guaranteed by the American government, and actually, the U.S. Mint is one branch of the government that does do a nice job,
Mm.
Dave. I give credit where credit's due. Not too many branches of the government could do anything right, for sure, but the United States Mint is actually one that does one pretty well. I think the post office lost $5 billion last quarter or
Wow.
something, or last year. I read that too. What a disaster! It actually weighs a bit over 1 troy ounce. Sorry to get off topic, but it explains the slightly lesser percentage of purity. It is still 1 ounce of gold, but because there's other alloys in there, the coin weighs a little bit over 1 troy ounce.
Hmm.
It also, Dave, comes in different sizes. You could also see a half-ounce eagle, quarter-ounce American eagle, 10th-ounce gold eagle, smaller sizes, but they don't make that many of those. So, the smaller you go in ounces, audience, the more expensive it is to own gold. But
Ah.
my preference is the full 1 ounce gold American eagle version.
Maybe just one further point. Can you give us maybe a word picture of the coin you're holding so we can actually see it in our mind's eye?
The head side, or they call that the obverse side, is a throwback to another classic American coin. The St. Gaudens. We've talked about that coin before. That was the original double eagle that was made between 1907 and 1933.
Hmm.
And then obviously we had an important event in 1933 when the government wanted to make the ownership of gold illegal.
Mm.
The reverse side of the coin, Dave, features a bald eagle bringing an olive branch to the nest of a mother female guarding her hatching babies. And don't forget, this coin, last year in 2021, was the first time since 1985 where they changed the image of that eagle. So
Mm.
there's two versions, a version 1, type 1, or a version 2, a type 2. The front is the same on both coins. The 1 ounce gold eagle, Dave, bears a $50 face value. That's what the mint gives it as a face value, but don't think that it's worth $50. It's not a coin that you would go out and give shop with, or think that it's worth $50. I mean, based on the weight of the gold and the market right now, it's worth easily over 40 times that value.
Wow. Ken, thank you so much. Coming up in a moment, we're going to continue talking about the strong possibility of a recession with Ken Russo from Midas Gold Group, and that's coming up right after this.
I'm here with Midas Gold Group's senior trader and Marine Corps veteran, James Clark. James, why are people investing in gold and silver?
Well, Dr. Gorka, the Federal Reserve supplies money to pay for congressional spending. As Congress expands spending, the Fed has no choice but to keep printing money at an accelerated rate. This causes the dollar to fall and gold to increase.
So as the Fed and Congress devalue the dollar, what can people do?
As the nation's #1 veteran-owned precious metals dealer, we offer diversification strategies in the form of precious metals. As Congress looks to the Fed for more money, investors look to gold and silver to protect their nest egg.
And I recommend that you look to Midas Gold Group for all your precious metal needs. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is recession, or protect your retirement plan before it's gone. Now, if you live in the Los Angeles or the Phoenix area, you have an advantage because you can visit our local office to meet with us in person and actually see some of the product we're talking about. For the address and the directions, just log on to our website, MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD. 855-322-GOLD. By the numbers 855-322-4653. Now, let's get back to our topic. Ken, some folks listening may not have heard the first part of our program. So, if you will, I want to recap what you've already said about the possibility of a recession coming. What makes you believe that?
Well, I mean, the stock market is definitely cracking. I don't know if people have noticed or have seen it on their statements yet that have started coming in the mail, but they're going to start going down in value. 50% of the NASDAQ stocks are down over 50%. So think
Wow.
about that. And many are more, down much more than that, as a lot of stocks have been crushed. But we've been warning people about that since last year, and it is what it is. But you also have higher energy costs, and you have, consumers that if they have to pay more at the pump, or more for their utilities and whatnot, they're going to have less money to spend in other places. So that's not positive for the economy. We also have sanctions, shortages, and basically a financial crisis, looming, commodity crisis looming, inflation, which is over a 40-year high. And I would say that it's a lot higher than what they're even saying. So with all of these things going on and people feeling less wealthy because of the fall in stocks and bonds, and eventually real estate, because interest rates are rising. So, the 30-year mortgage is now over 5%, could go to 6, could go to 7, could go to 8% pretty soon. Um, Real estate's going to take a big hit too. So all of this stuff will make people feel less wealthy, Dave, and they'll slow down their spending habits, to make it real simple. And the likelihood of a slowdown or a possible recession is even that much more real.
What ways can people then own gold? What different ways can they own it?
Well, physically is the way that we would say is the only way to own it. If you don't hold it, you don't own it.
Mm.
And if you have cash reserves, if you have a non-qualified account, maybe just a regular trading stock account, or just somewhere where you keep some money. Maybe a CD is expiring, or maybe an annuity is coming due. You could use those funds. You could move them sideways, and you could own some gold coins or gold bars and take them in your own possession. That's called it's a cash purchase. So that would be one way to own gold. The other way is if you have an old 401k or an old retirement account from a previous employer, or you have an existing IRA, you can do a sideways transfer, and
Mm.
you could have retirement accounts that are backed by gold coins and gold bars and silver, and that would be referred to as a gold IRA. So two of the most common ways that you can get diversified right now, Dave, and take some of your money and protect it, is you could have some money in a retirement account and move that into a gold IRA, or you could just have some funds, cash account, liquid account, non-qualified account. You could do that through a check or a bank wire, or you can draw a cashier's check from the bank, and you can come on into the office or give us a call, and we can make some proposals, and then you can convert those dwindling dollars, those lost purchasing power dollars that are just falling day by day by day, into something that we feel will protect your purchasing power and take delivery and possession of some of that gold and silver, so you have it for your portfolio.
And listening to you, I think people will understand why I own gold from Midas Gold Group. Ken, thank you so much for your time today.
It's my pleasure, Dave.
That's going to bring us to the end of our time together here on the Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. I'm always happy to let you know that the Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you again for your time today.
Yes, Dave, have a great week. And everyone in the audience, sorry to be a downer as usual, but this is just reality. And the point is you can do something about protecting your money. So I would say do it.
You provide us, I think, not just with facts that might be interpreted as a downer, but you also give us a lot of hope, and I'm thankful for that. I'm Dave Dino. Come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.